The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we ended up the week of trade on Friday, we found a kind of a mixed, quieter day in the grades at oilseeds, I would say. Corn was a little bit stronger than beans and wheat. We had a really solid move higher in live cattle and feeder cattle futures, and hogs had an okay day as well, and it was much quieter in the macros and energy markets too. A lot of headlines, a lot of volatility for the first week of March. Let's recap it all and take stock of where we're at. Joining us now, Kent Beadle with Paradigm Futures for our market analysis here today on the show. Kent, it is great to talk with you again, sir. And I think I've maybe caught my breath from the week of headlines. It's just been what a week it has been in the trade, Kent.
Yeah, it really has. Obviously off to a terrible start. Following through on what was a really brutal week a week ago. And of course, what ultimately happened was that by Tuesday's open, we realized that there was not a reprieve coming from the president on these tariffs. There was an assumption by the marketplace that there would be retaliations. And in fact, in the case of the Canadians, there were almost immediately. Although, interestingly enough, those retaliations didn't include corn and soybeans. They did include wheat and barley and other small grains and canola and sunflowers, etc. But then, and then the worm turned, right? We had some inklings from the Commerce Secretary that maybe a deal could still be made. President talked with President Sheinbaum from Mexico on Thursday, and lo and behold, a lot of the products that had been given, had tariffs put on them, had them removed as long as they were part of the original USMCA agreement. And of course, that does include most of our agricultural products. Those were all very detailed in the USMCA. Mm-hmm. And so, we, essentially started to rally mid-session on Tuesday. As it turned out that we probably had priced in the extent of any retaliation that was going to occur. We had a 15% correction in corn, as an example. And it wouldn't make a lot of sense for the retaliations to be any larger than that, given the world balance sheets. And so we started to rally. And then as it became clear that maybe we were going to be a reprieve for another month, we started to improve. Where the market stands today, though, is still exceptionally uncertain as to what the future road brings. Keep in mind that we had a 1 month reprieve 1 month ago. And that led to a sharp 2-week rally that certainly could be explained by the underlying market fundamentals as we understand them. We still have very, very tight world balance sheets now, ex-China in wheat and in corn. And in our opinion, that certainly implied that we needed to have a $5 nearby handle on corn futures, and that wheat prices had been totally undervalued and were rallying as kind of expected. But the question is, can we go back there again if we think that it's possible that in another 30 days, we're going to repeat this same sort of, well, maybe the tariffs are going to go on again, and maybe the retaliation is going to come again, and are you going to get end users to chase the market higher and to buy corn and wheat at what we think are value if something like this is going to happen again in 30 days? And so it could lead to a very choppy and much more uncertain period here as we start to approach this period when farmers are going to start getting out in the field here in about 3 weeks.
Yeah, very, very good points. And I want to lean in a little bit here. You mentioned the tightness on the world balance sheets. And I also, as we closed out Friday's session, the markets obviously don't like the volatility, yet we essentially ended near unchanged on the week amid all of this craziness, especially at Quart of Beans. I believe we were kind of unchanged near the week. So you look at how the trade reacted to all of this noise and more, and you couple that in with your point of we still have tight world balance sheets. I think at the end of the day, the volatility in the markets creates opportunity. Kent, would you agree?
Yeah, well, I absolutely think that that's true. And right now, in our opinion, the opportunity is for the end user. Okay, so if that's your ethanol processing plant, that is your feeder, your cattle feeder, your hog feeder, poultry, chickens. Okay, corn is cheap here. This week, we added a bunch of margin back into hogs, for example. Hog prices, closed the week higher. As you mentioned, cattle prices closed the week quite a bit higher as well. Of course, the feeders came along with. We see things as, we see the United States as being this right now ultimate source and probably only source of corn in the world for goodness. Until this safrinha crop that has been just getting planted, ultimately gets harvested here in, later July and into August. And so, we felt that even if the tariffs were put into place and were locked into place, we didn't see the likelihood of either the Canadians or the Mexicans putting retaliations on, and yet the market was pricing in retaliations and to the tune of about 15%. So honestly, we think that the opportunity here with the volatility that we've had recently is for the end user to go out here and get some coverage, because once again, the world balance sheet essentially says that the amount of corn that we have ex-China at 7.1% stocks to use is the second tightest that we've had since 1995-96, 29 years ago. All right. World wheat stocks to use ex-China, the tightest since 2007, 2008. All right. So goodness, there's not a lot of excess grain in the world, and yet we have futures prices and cash prices, to the American farmer that are still below cost of production, both old crop and the crop that some of which is still sitting in the bin, but a lot of which has been marketed this year, and then the forecast here for the new crop. Last November, USDA said it was going to cost, I believe 800 and some odd dollars. I know the calculation is it's going to be $4.90 a bushel on average at a 181 yield for the average American producer to break even. And we've got 450 D's corn futures and an average harvest basis at about 30 cents. We're well below what it's going to take. And of course, soybeans aren't better. In fact, they're worse in terms of how it pencils out. And that's why you saw that acreage shift here at the Outlook conference. The economics say corn over soybeans. We agree with that. But what we don't agree with is that under these circumstances, we're going to have more acres. These are the kinds of circumstances where the bankers are probably going to determine that we're going to have less acres. And so ultimately, we see that, again, take all that back to where's the opportunity here? Well, it's not for the American farmer. It's probably for the end user who has an opportunity here to go out and book, essentially another year's worth of inputs at a price that that costs less than what it's going to take the American producer to actually get that crop in the ground and get it harvested and put in the bin and marketed. So that's where we see the opportunity today.
Kent Beadle with Paradigm Futures joins us for market analysis. I should ask you, thinking about the acreage and more here, we've set crop insurance prices, et cetera. Does the tariff headlines and the conversation and all of this, does that potentially have any impact on U.S. acreage here as we get into spring planting? What do you think about that?
Well, if this uncertainty, it's weighing on the psyche of the American farmer. Okay, we just had a good rally, essentially clawing our way in corn back to something that represented break even to a small profit for a good farmer in Illinois and Iowa. Okay, then we took it all back. I felt as though we needed to maintain or improve upon the highs that we had in order to justify the kind of acreage number that the USDA gave us at 94 million. I actually thought that a more reasonable number was probably 92 and a half or 93. Okay. And I still agree with the 84 million soybeans. All right. Because the economics there are so poor. Now that we've pulled back, I think that it still becomes economically more likely that we not hit these USDA estimates. Of course, we have to remember that in the month of May, the USDA is going to take that number, it's going to put it in the balance sheet, and we're going to have to trade it until the end of June when we get a new number that becomes more real. But it certainly weighs on the economics and the fact that there may be ongoing tariff negotiations and market volatility around the whole tariff situation just makes it more likely that we not hit the acreage estimates that the USDA had outlined in the report that we had at the Outlook conference.
How about over in the livestock trade? You mentioned cattle and hogs a little bit. Obviously, a very strong futures end of the week in cattle and even hogs as well. Any notes for you across that protein sector, Kent, just as you're looking at the whole landscape right now?
Yeah, well, of course, the ultimately what we saw last week as corn prices started to decline, and then certainly early this week, the feeder cattle stood up and cheered, right?
Yeah.
We need we've got lower input costs here, and that definitely provided some support to those futures prices. And then ultimately, the live cattle started to come around. The cash trade in the Southern Plains sound, very light this week, but mostly steady after, a number of pretty rough weeks here as we've corrected. I think that the cattle are a market that still have some very strong underlying fundamentals. And I'm not actually convinced that we've seen our highs yet in those markets. It was nice to see the April cattle back above 200. That $2 a pound. That was quite a impressive move here that we've had. And I think the underlying fundamentals ultimately support it, and that the correction that we've had in the cattle are like a lot of the other corrections that we've had here recently. They're just sort of clean the deck out and get the market healthy again for the next move. And right now the inventory reports and overall livestock numbers tell us that we're probably still have the ability to go higher as long as the American consumer is willing to spend the money that it takes to buy more expensive beef. And, so far, despite a lot of other rickety parts of the economy, it feels like that beef demand has still been there.
Kent, good perspective as always. Final thoughts you would share or reiterate with folks here today as we close out the show?
Yeah, well, again, I think that the marketing opportunities, this might be a place where courage calls might be something that would be warranted. I do hope that the listeners out there took advantage of the last rally to extend some marketing percentages. I know we certainly did with our clients. But what we've been doing on this break is, rolling down puts or adding some call option protection to previous sales. We think that that's the right thing to do here. We still think that there's going to be an awful lot of marketing opportunities ahead of us, certainly with a dry soil moisture profile and a very tight world balance sheet.
Kent, if folks want more information, want to talk with you about their marketing, I know they can connect with you at Paradigm Futures very easily. What's the best way to reach you?
Yeah, all our information is at www.paradigmfutures.net. Phone numbers, all of our brokerage staff, and we're all here and willing to help. If just feel free to give us a call.
ParadigmFutures.net for more information. Kent Beadle, always a pleasure to talk with you, sir. Thanks for joining us on Market Talk today. Have a great one. We'll talk to you again soon.
Thanks, Jesse. Appreciate it.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.